Alright, hello. A bit late, but it does not matter. Nobody watches this crap anyway. Welcome to the soon-to-be most popular show on YouTube. My name's Frank. This is No More Paper. It's a community I'm trying to build through word of mouth. Just traders trying to become traders. Nothing more than that. Alright, let's get started. Glad the holiday's over. I couldn't wait to get back Monday morning. That's all I kept thinking. You know you picked the career you want when you dread vacations. I'm already dreading Christmas, and it's 20 some days away. Traditionally, the markets have been positive over Christmas. They call it the Santa rally. I'm not so sure this year. I guess we'll see. Let's take a look at the news first, then I'll take a look at the overnight prices. There was a CME blackout. I think it was Friday morning, but we'll look into that a little bit. But first, let's look at the calendar. Today we have PMI. Is it PMI? Yeah. And it's current. It's not dated like other data. I expect that to be pretty huge. Other than that, not much. Later on this week, we got some Fed speeches. People will be paying attention to all the Fed speeches because right now we've got nine days to the FOMC. And right now we are up from Friday's prediction. It looks like everybody's really pricing in a cut. It's just strange because there hasn't really been much word from the Fed about it. One Fed official said, yeah, maybe it's a good idea. I don't know. I think people are getting a little overexcited. Not to mention, I'm not so sure a cut's going to save this market. At some point, they're going to have to accept that we need to return to value. But heck, what do I know? Maybe I'm just saying that because I have skin in the game. But you got to hedge. You always hedge. All right, what else we got? Let's take a look at the headlines. Let's start with bar chart. Why not? Their headlines usually are terrible. Good tools, terrible news. Stocks set to open lower as bond yields climb. PCE inflation data awaited. So that's a double-edged sword right there, because if the inflation data comes out hot, that means there's likely to be a cut. Oh, wait, no. No, if inflation data comes out high, it's unlikely to be a cut. And if it comes in low, likely to be a cut. So it's not a double-edged sword. I was thinking of unemployment. Where am I? Maybe this is why I don't like vacations. Got to relearn everything. Let's see what they have to say. Following hawkish comments from Bank of Japan Governor Kazuo Ueda. I think that's how you say that. I'm not so sure that's the only thing. Let's see if they mention the the blackout. This week, the September reading of the U.S. core CPE, which CPE is what day? I think Thursday. That usually comes out on Thursday. PCE, not CPE. Doesn't matter. No, it's Friday. That'll be a big day. We'll see. What else do they got? They always do ads. I mean, this is clearly an ad. All right, let's see. From the Associated Press, which you can't trust any of them, but I don't know if people will be buying stuff. My family doesn't really ever do Christmas, but so I wouldn't know. I don't go out and see who's out there. Deals promoted as some of the best of the holiday season are expected to keep people across the United States glued to their computers and smartphones as the post-Thanksgiving shopping marathon wraps up on Cyber Monday. It's no secret that buying things online is now a staple of many people's everyday routines, and year after year those purchases mount during the gift-giving holiday rush. Experts, you should change that to clowns. Clowns expect consumers to drive record Cyber Monday spending this year, even amid wider economic uncertainty. How can you? It just doesn't. I don't get it. I think they're lying. Adobe Analytics has estimated that U.S. shoppers will spend $14.2 billion online Monday, or 6.3% more than in 2024. They already spent $11.8 billion online for Black Friday, and another $6.4 billion on Thanksgiving Day, exceeding Adobe's forecast. That's just, I don't know. Yeah, but is this more than last year? Remember, it's what they don't say in the article. I would have thought if Black Friday and Thanksgiving Day exceeded this clown analytic, they would have said that. I know I'm searching, but anytime I read an article that's positive or negative, I immediately, there's a plan behind it. Cyber Week is off to a strong start. Vivek Pandya, lead analyst at Adobe Digital Insights, said, discounts are set to remain elevated through Cyber Monday, which we expect will remain the biggest online shopping day of the season and year. I'll tell you one thing people won't be by, it's random access memory. While the amount of money going into online shopping carts is expected to reach new heights as consumers try to get the biggest bang for their bucks while they can, rising retail prices also may contribute to any record sales figures that materialize. So which is it? Okay, then now they blame tariffs. Couldn't possibly be all the money that the government printed. That couldn't be it. After effects of the 43. I don't think there's any after effects. Well, if there are, they're not that major that they affect most Americans. But the rate of growth is slowing, with an anticipated increase of 3.7% to 4.2% year over year, compared to 4.3% during last year's holiday season. Okay, so it's going to be more than last year, but the rate of that increase is slowing. At the same time, see, this is where I get really worried about America as a whole, and why our institutions want to just keep the printer going. At the same time, credit card debt and delinquencies on other short-term loans have been rising. So that would be car loans. I would think a car loan might be a long-term. Like a payday loan, maybe? More and more shoppers are turning to buy now, pay later plans. That's scary, which allow them to delay payments on holiday decor, gifts, and other items. Okay, if you're doing buy now, pay later for holiday decor, for a wreath, for Christmas lights, I think you need to check your priorities. Buy now, pay later loans are expected to drive $20.2 billion in online spending this holiday, but it's not real. It's fake. It's fake economy. All right, that's enough of this. Let's see what Yahoo says. Sometimes I really regret doing this, and this is often it. Shinos warns of debt risks tied to NVIDIA AI chips. Yeah, he already said stuff, so he's trying to say it again. The market hasn't even been down for 6 hours, and they're already latching onto it. Stock market today: Dow, S&P, Nasdaq futures sink, Bitcoin plummets, and downbeat start to December. We're going to look at the prices later. It's actually strange. I saw it last night, but I don't know if it's still the case. Bitcoin USD was way down, but Bitcoin futures were not going down as much, which is kind of interesting. I don't know if that's normal. As well as the S&P and the Nasdaq were not as far down as Bitcoin. Bitcoin often leads or is a sign of the overall market. I don't know. We'll take a look at Bitcoin in the daily and the 5-minute chart. Tech led the retreat, with Nasdaq 100 futures down around 1% and those on the S&P dropping roughly 0.7%. Contracts on the Dow Jones Industrial Average slid 0.5% after the blue chip benchmark led Wall Street indexes to a 5th day of gains on Friday. It's like every 3 to 5 days, maybe it's like 3 to 7 or 4 to 7, we just rip lower again. Let's take a look at that right now before I forget about it. It's interesting. So here's the ES daily. This is not continuous, so we can't go back real far, but if you look at the gains over the summer, there's obviously a trend upwards. But starting in October, you don't really get a period of green days straight on. I think this is when the market really started to show its weakness. And that's when I kind of noticed it as well, was when we had a huge pullback due to, I think this was a tweet from the president, tariff stuff or whatever. Usually when that would happen, we'd go right back up. Or at least you would see rampant buying to drive it back up. And eventually it did. It did reach new highs. But look at this selling, or look at this low volume. They couldn't keep the momentum up. And then you remember this, first week of November. 3 days of recovery. That's another sign you get. If you look, but if we count the past 2 weeks, you have more red than green. And so on and so forth, more so than we did earlier this year. Again, I'd have to look at a continuous futures chart to see the volume. What is significant, though, is this most recent buying. That was pretty strong as far as volume. That does give me pause. And that could be the so-called Santa rally. But we're not doing so good so far. If we don't break, I got to readjust this head and shoulders. We did break the neckline and then failed. But that's fine. It won't be broken completely, the head and shoulders pattern, until the right shoulder. You can have multiple right shoulders or multiple left shoulders, as we kind of did here as well. But if this right shoulder beats the head, then we got to start over with a new pattern. But we'll see. I think we may get mixed markets. That could be possible, but tech is going to be hurting. You might get record spending by consumers this year through Christmas and all that, and that might give a boost to the market, but people aren't going to be buying AI GPUs or AI computers. Or the majority of the income of these companies, these tech companies, is not tied to consumers. And that is the major problem. That is the major difference between the dot-com bubble and now. The dot-com bubble was directly linked to consumers. In fact, I would say the majority of past, I'm not going to say bubble, I'm going to say bear markets, but bull markets, were linked in some way to consumers, to a market for it. AI has very few customers and is very circular. And I understand that it could just keep printing money and keep the circus going, which is why the Fed even considered a cut in the first place, which is just, I'm not going to get into it. I don't take a stance with that type of thing. I look at the charts and I trade them. They go up, I'm bullish. They go down, I'm bearish. All right, let's take a look at more news articles before continuing. December is typically a strong month for stocks, but strategists say the so-called Santa Claus rally may not happen this year after a string of events, not least President Trump's tariff push, kept uncertainty high. What does that have to do with the Santa Claus rally? Man, I mean, if something good happens in the world, I don't say Trump did it. If something bad happens in the world, I mean, he's one small puzzle piece. I don't know, I'm just over it. Let's see what Jim Chanos said. Because he was yakking last week too. Famed short seller Jim Chanos sees risk in... So when you see the market start to go down, they roll out all these articles. When you see it start to go back up, they roll out other articles. NVIDIA's AI chips have fueled a new debt market, and famed short seller Jim Chanos is flagging its risk. emerging AI cloud computing companies looking to rival big tech in the market for artificial intelligence have secured large loans backed by the 5 trillion chipmakers' graphics processing units, using that capital to buy more AI chips to scale up their operations. The firms lease space and data centers, fill them with AI hardware, and rent out computing power from that hardware for tech companies to train and run artificial intelligence models. 4 firms in the growing sector, 3 of which count NVIDIA as an investor, wow, have more than $20 billion in debt using NVIDIA's AI chips or GPUs as collateral, the information reported in July. Chanos, who is famous for predicting the fall of Enron during the dot-com bust, sees red flags in the rise of GPU-backed debt because the neoclouds securing the loans, neoclouds. I'm guessing that's a term now for the new cloud computing companies. Securing the loans have no clear path to profitability, making the debt hard to pay back. Well, they'll just ask the government for a buyout, for a bailout. Business models like the neoclouds, a lot of the AI companies themselves, are just loss-making enterprises right now. Yeah, but I don't know. Chanos said in an interview with Yahoo Finance this week, you've got to hope that changes, because if it doesn't, there's going to be debt defaults on these things. I don't understand the hatred for short sellers. And I really don't understand why it's become political now. Like if you dare to criticize the AI bubble, then you're just you're some type of lefty loon. I just don't get it. Financing trend pioneered by CoreWeave is one of my biggest profit makers right now in my shorts. It's a form of asset-based lending. Money-losing companies can use their assets as collateral to secure capital they otherwise wouldn't be able to access, typically at higher interest rates. Because the so-called neocloud firms are so much smaller than the tech giants they look to rival, GPU-backed financing provides a helpful path in scaling up quickly. NVIDIA has invested heavily in the neocloud space as it looks to grow its customer base beyond big tech. Yeah, but all that integration people have not liked. NVIDIA-backed CoreWeave, which went public earlier this year, and rival cloud provider FluidStack each have roughly $10 billion in debt using their store of GPUs as collateral. And that is why they expanded the debt ceiling or the depreciation on these GPUs, which I can understand in some aspects. I saw a good video by Eli, the computer guy, saying they're not wholly wrong in thinking that modern GPUs are going to last longer than old ones, because Moore's law it's not dead, but it's circling the drain, because you're limited by physics with how small you can make these processors. They got to find other ways. So we're kind of at a pause with that. So if you buy the fastest GPU right now, a 5090 consumer grade, let me put it this way: if you bought a 1080, I forget what year that came, or even before that, let's say you bought a GPU in 2005. By 2007, it was pretty darn obsolete and you had trouble. I bought a 4090 almost 2 years ago now, and it'll be fine for another 3 to 5 years for me. Even longer than that if I'm not picky. So I can understand it. Problem is, they still need to make money. At least when they are mining Bitcoin, you could argue that made money. The other big risk is the AI chip-backed debt is a topic of major debate in the tech investment world. NVIDIA's GPUs may depreciate or lose value. So the issue with that, though, is whether they depreciate quicker or not, it hurts NVIDIA. So if they depreciate quicker, then more money is needed to buy them from NVIDIA. Or no, maybe it's only the other way. What I'm trying to say is, if the GPUs are used for longer, people aren't going to be in the business, aren't going to be looking to buy GPUs from NVIDIA. I don't know why nobody's pointed that out. So if they expand their depreciation cycle on a GPU, that would mean they're not going to buy as many GPUs. Who could have known that, when I was in my early 20s playing around with computers, that NVIDIA would be the biggest company in the world with computer chips that were used to run video games, being the most important thing in the world. NVIDIA launches new AI products roughly every 18 months. As soon as you see that demand start falling, which the announcement of Google starting to make their own cheaper chips, that caused quite a large drop in NVIDIA's price. The cracks are starting to show. So even while the rest of the market might be slowly trailing up due to the bull market broadening out, the leaders, the big seven, they're going to start pulling back little by little. Maybe not the big seven, but the big ones in AI. The Metas, the Googles, the Apple. For now, they're going to survive no matter what. NVIDIA is going to survive too, don't get me wrong. I just don't think they're worth $177 a share. I don't think they're worth $5 trillion or whatever it is now. All right, let's see what he says though. Most cloud firms, including CoreWeave, anticipate their AI chips will generate revenue for roughly 6 years. Amazon in January reduced its depreciation schedule. Reduced the useful economic life of its AI chips to 5 years from 6 years. I thought they went the other way. But Shanos said there's a chance chips could lose value more rapidly as NVIDIA launches new AI products roughly every 18 months. For one, that would make it harder for companies to earn enough revenue from their chips to pay down their debt. Second, the market value of chips could fall below the value of the loans they secure, raising the risk of default. Shanos noted that neoclouds already aren't profitable and you assume their chips will last a long time. A lot of business models we're looking at, some of the new data centers and the neoclouds like CoreWeave and Nebius, they don't make money at 8 or 10-year depreciation, he said. The cost of capital is still higher than it should be, higher than the return on AI data center deals. If the economic life on these things is 3 years, the whole economics of a lot of these deals kind of falls apart. I think it's closer to 5, maybe even 6. Let's see what the comments say, if they load. Save America 1. Who would name their account that? NVIDIA backs these companies, it's a drop in the bucket to them. CoreWeave or Nebius is like a supply buffer. That smooths out the lag time on supply. Demands are very high. You're not saying anything. AI is just getting started. This is not Enron. Enron was sell capacitance as energy, which is basically air. Well, so is AI. That is the way I look at Bitcoin, air. NVIDIA is server farms that do a lot. This has got to be like an AI talking, or I don't want to get dumber right now. Does this have something to do with short positions, or the fact that over 80% of fund managers are behind the benchmark return? NVIDIA invested a total of $350 million into CoreWeave. It represents less than 1% of CoreWeave's $35 billion plus market cap. Well, that is a good point if it's true. NVIDIA participated in a round of funding of $700 million into MBIS. They were one of many participants, and NVIDIA's stake was not disclosed. If you want to see what a heavy investment looks like, Microsoft invested a total of $13 billion into OpenAI that is now worth north of $125 billion. That's a pretty heavy investment, and I shorted Microsoft too. Financial news, this is interesting, I like this. Financial news has switched to risk off now that the holiday weekend is over. Corrupt targeted sell-off of crypto just as the weekend closes, trying to set off the same shenanigans of 2 weeks ago. Crypto shorting is the tail wagging the dog, but we have all caught on now. This is true. How can you short crypto when it has no backing, like shorting wooden nickels? People still, I don't understand why people still cannot conceive that. Crypto is no more fake than regular money. The value of U.S. currency is not backed by gold. It hasn't been backed by gold for a long time. It's backed by the U.S. government. I think that's a large difference, but crypto is now backed by the U.S. government too. If you look at the charts, the prices correspond to each other. I don't know. Let's see what else they say. Japan sell-off. We're gonna look at the yen is up. Still don't know what exactly this means. What is JPYX? Huh. Treasury started the post-Thanksgiving week on the back foot as a slide in Japanese debt spilled over into bond markets globally. The yield on U.S. 10-year notes rose 3 basis points to 4.04%, following a jump in the Japanese equivalent to the highest since 2008 on the prospect of a Bank of Japan interest rate hike later this month. That also pushed up rates on bonds from Europe to New Zealand. I don't understand enough of this. I understand the VIX. Let's take a look at prices now. I'm done looking at news. This is the 5-minute ES. Fell sharply close to the open. I remember last week I mentioned that they were pumping it up over the holiday week, basically Monday, Tuesday, Wednesday, and Friday, to set them up for a nice area to sell off. I don't yet know if that's completely true. We'll see. What is this price I have here? It's the low. I don't know why that changed. Fell below the low, came back, and rejected it. Looks like we're trying again for it. We'll see what happens. The NQ, very similar. Didn't so much reject the low as it did Friday's opening range low. The only significant difference with the NQ is that we are near the pivot point, which the pivot points are now changed because we are in a new month. But you can see how reliable pivot points are as far as key areas of support and resistance. I took a losing trade here because it really looked. I bought here, hoping right at the pivot point, hoping what would happen, and it did. But at the time, price action really looked like it was gonna rip right past, and I didn't feel like taking that huge of a loss, so I just took a loss of like 40, 50 bucks. The Russell also looking very similar to the S and the NQ, which is kind of strange. All the indices were aligned mostly on last week's push up higher. Let's see if they're all aligned on the push lower, which it looks like they are. That could mean we will trend lower today. I'd like to do a study on overnight futures opening. If the open of the overnight futures is bearish, does the regular trading open at 9:30? Is the probability of that being bearish high? I would think if it was, it'd be too easy. All right, the Dow also pretty weak. Not quite as weak. Did not even get close to Friday's low. Gold. I didn't even look at gold yet. Gold's trending higher, which is interesting because they're quite correlated last week. Gold and the indices. It'll be interesting to see what will happen. Will people start flooding back into gold? I guess as long as the US dollar keeps going down. Oil, let's say flat. Had a spike at the beginning of the night. It is right back where it started right now. That would be a good long trade, especially because the RSI is trending up. Let me do that quick. let's take a look at Bitcoin. That is interesting. We'll take a look at the daily then in a minute, but why is it delayed? Contract expired, duh. MBT. No wonder I was seeing weird stuff last night. Why did I have it on? Okay, so it did fall too. I was looking at the wrong contract. But kind of something of interest is if we look at Bitcoin on the daily chart, we've had a huge decline since October. Now this is Bitcoin futures. It's a little different than Bitcoin. And the rally of last week in the indices is not correlated perfectly. It was much weaker in Bitcoin futures. That could have been a clear sign that we weren't really gonna get crazy, get any kind of crazy recovery. I've been trying to get Bitcoin futures trading permissions from interactive brokers, but I don't know, they don't want me to for some reason. Let's take a look at the actual Bitcoin to US dollar. This is the 5-minute. I still did not section it off. Okay, so you can see it on the daily too. Last week's rise was not reciprocated in Bitcoin. All right, let's take a look at the VIX. This is VIX futures, slowly trending up. Moving towards backwardation a little bit. I wouldn't say it's significant though. The actual VIX gapped up. What do you mean gapped up? I should have. What the hell's the difference? Is it the same thing as full trading hours? Yeah, I don't know. Again, you can see here, this was I think it was, anyway, the blackout, CME blackout. The volatility of the VIX is not going up though. So we'll see. This might be a short-lived bear Bear day, a bear move. Dollar moving down pretty much in the overnight. That could be because of the yen going up. The euro's going up too. Wait, which one's the 5-minute? Yeah, the euro's going up in the overnight as well. Alright, that's all I got for today. I don't know. There's about 3 signs that say we're going down, 2 signs that say it's we're not. We're gonna stay where we are or go up. Meaning it's close. It's very close. Until we see the VIX show some serious volatility, I don't know. I don't think we'll get anywhere. The volume, even on Friday, was slowly turning to sellers. But this does worry me, the amount of buyers in this area. It could be because they are really trying to get it to this general area, which was the pivot point of last month. Now for the next, probably this whole week, last month's pivot points might be significant. You just gotta watch and be careful. Alright, that's all I got. Good luck, goodbye. I don't know what days this week I'm gonna be streaming. I'd like to get caught up on a lot of stuff and nobody watches anyway.